Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you 3 examples of winning gap trades from this morning using my gap trading strategy that is by far one of the best, most consistent, and profitable trading strategies you're going to find across the markets today. So let's go through what this is. As day traders, we need opportunity. Stocks that are gapping higher or lower right out of the gate in the morning create opportunity for day traders. But the real opportunity exists when traders can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. So traders that take my course at LazyGapTrader.com learn exactly what the specific criteria is we're looking for. What type of volume on these stocks do we look for? Which stocks does this work the best with? How much of a gap higher or lower in the morning are we looking for? How do you trade these specific opportunities? What type of stop loss limitation do you need on these trades? How much of a profit target are we looking for on these trades? How do you squeeze the most profit out of these trades? How do you catch the ones that run several dollars? And we're going to see one of those today. Everything traders need to know is taught in the course at Lazy Gap Trader. But here's the holy grail. What traders learn is how to calculate the specific price levels where these stocks should first be drawn to like a magnet and then have a price reaction from in the other direction. The holy grail is having the confidence that the support or resistance level that you calculated is the one that's going to cause a price reaction, creating a profitable trade. That's what's taught in the course at Lazy Gap Trader. We're going to go over the charts of these 3 trades in a moment, but first I want to show you the other thing I do. I give traders an opportunity to get my gap trades sent to them by email at 9 o'clock in the morning Eastern Standard Time, 30 minutes before the opening bell even rings. Here's a copy of today's email. As you can see, it arrived at 9:01 a.m. That's Eastern Standard Time. This morning, we had a pretty active morning for the gap trades this morning. We had 9 potential gap trades on the board. Now keep in mind, all these stocks are not going to hit the specific price level or the specific price target that we want. These are the opportunities for the morning. However, out of a list of 9, our expectation is we're going to get at least 2 or 3 trades out of this list. That's exactly what we got this morning. We got 3 trades. We only want to take the trades at our price levels. We're waiting for the stocks to come to us. These are the high probability trades. That's what you learn in the course. Where do the high probability trades exist? What are those support levels? So let's run through this list real quick. Just go through the numbers. We had a couple of heartbreakers this morning. The chart you were looking at just then on the screen was Dollar General. That was actually one of the heartbreakers. I had it on the screen as a bit of a teaser, but we missed the level by 1 penny and DG just ripped higher from 88.26. You can see here the level that I had was 88.25. That happens sometimes. It's just part of the business. The next one we will look at, though, is Micron Technologies. Gap lower support levels are $59.83, $57.28, and $55 even. Stop and profit target is about 30 to 55 cents. These are minimum profit targets. I'm going to go over that in detail when we get to the charts. Also keep in mind, when I give more than one support level on a stock, these are separate and independent trading opportunities. All the levels identified should provide a tradable bounce level. The next one that did hit its price level today was Dollar Tree. Gap lower, support levels are 85.12, and then I gave 2 secondary levels below that. Stop and profit target is about 40 to 75 cents. Again, minimum profit target. Another heartbreaker was Box. It made a low of about 24, I think maybe 48, but it did not fill me on the trade and it absolutely ripped higher in a split second. Unfortunately, it was another heartbreaker, part of the business. Don't like to get 2 of them in the same day, but it does happen. The last one on the board, Tech Data, TECD, gap higher. Resistance levels are 91.97, and then I gave a secondary level higher than that. Stop and profit target is about 40 to 75 cents. This was a home run. We'll go over the chart of this one in a moment. So we're back on the chart of DG. Now this wasn't a trade because of the way in which it happened. never hit the level. This is the trade we really wanted. So this is for the folks that have taken my course and understand what I'm talking about. The 88.25 we wanted was really as it came down in the beginning part of the day. It was really that second or third candle of the day that we really wanted this to hit the 88.25. That was the trade we were looking for. You see the bounce that took place all the way back up to a high of $90.40. That was the one we wanted, but it just never got there on the first run. And when it came back, it even came up short. But that's not the same trade, as traders know who've taken my course. That's not the same trade we wanted. We wanted the trade in the front part of the day. Now we're on the chart of Micron Technologies MU. Now this one looks like it didn't work. However, let me just go down to a 1-minute chart real quick, then we'll come back to the 10. So you see here, the stock closed yesterday all the way up at $62.57. It was getting a nice little haircut at the open. In the first minute of the day, it did come down right into our price level, $59.83, went slightly below, making a low of $59.57, well within the stop loss limitation. And in the next minute of the day, the stock made a high of $60.14. That represents a 31-cent gain against a minimum profit target of 30 cents. Is it an ideal trade? Of course not. Technically speaking, it was a winner. However, it's not the ideal trade scenario. It's not the ideal trade for sure. So we're back on a 10-minute chart. And the reality, folks, is that we're not going to win 100% of the time. Everybody knows that. But what I do is provide a mechanism where traders can identify specific price levels where their expectations change. Why is that? Because certain price levels are important to certain stocks. Once traders understand the why behind this strategy, why does it work? Why are these price levels important to these stocks? They have a different expectation of what should happen at these price levels. It removes a lot of the guesswork away from trading. When you remove the guesswork and you add back in confidence, that changes your trading for good. So net, while this one did work, not the greatest trade on the board, gave us the absolute bare minimum profit target. Dollar Tree. You can see where Dollar Tree closed yesterday up at $96.33, getting a nice healthy haircut at the open. We identified the level of $85.12. And keep in mind, folks, these price levels, anybody that's taken the course, any trader that's taken the course is able to come up with the same exact price levels that I do each and every morning. So what happened at $85.12? The stock came into $85.12, and again, not the greatest trade on the board, although it was a positive trade. If I go down to the 1-minute chart, what you would see is the stock gave us the gain of 50 cents on a quick bounce off the $85.12. Here's your 1-minute chart, and here's your high of $85.62 for a 50-cent bounce higher off the level identified 30 minutes before the market even opened. Not the greatest trade on the board. We were looking for a minimum of 40 cents. We got it. However, the stock then proceeded to go lower. But here's what you can see. The importance of $85.12 on this chart. Look how the stock continues to come back to $85.12. That shows you the importance of the number, and in the course, traders learn why that's important. I'm telling you, it changes your trading. It changes your outlook when you approach a trade. Now here's the home run trade. Tech Data. The stock closed yesterday all the way down at $82.40. The stock was getting a nice boost at the open. We identified a level of $91.97. The stock came into that level, traded through it slightly, and look where the stock went following that episode. We already made a low of $84.97. That's $7 below the entry price on the short side, right? This was a stock that was gapping higher at the open. We were looking to short the stock at $91.97. The stock pulled back from that level $7 or 7.6% in just a matter of minutes. You never know when the home run trades are coming, folks. And that's why we're happy with the base hits, base hits, base hits. Once in a while, we'll hit a double and a triple, and then we'll have a home run. You've seen the home runs on this YouTube channel. And in the course, there's an entire video module where traders learn how to turn trades like this into risk-free, emotionless trades, which teaches you how to squeeze the most profit possible out of these trades. Folks, you can learn how to do this. You can do this each and every day for the remainder of your trading career. If you want to learn how to trade the gap successfully, come over and check out the course at LazyGapTrader.com. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.